this rally is just so dynamic. It has a lot of buying behind it. And then from the reactions that are vertically down, now we are so horizontal. I mean, it doesn't really matter if we have maybe like something like this where we have some kind of slope and we still sprinting below some kind of lows, as there is a possibility of the recovery here. But let me ask you about a completely alternative scenario. I was just thinking, what bothers me about the structure in the Dow, and I think I've said this maybe a month ago. I just don't understand how an accumulation type of structure, if we are assuming that this is accumulation, has such a high volatility behind it. So look at all of these rallies, reactions. I mean, like they're just humongous. Usually we want to see the diminished volatility. Now, sometimes we would see the diminished volatility as accumulation unfolds to the upside, and volatility is taken out of the price with smaller spread, but in the uptrending environment. Well, we don't see it here. Volatility is still quite high. And that's just because S&P is still behind, NASDAQ is still being sold, the mega caps are being sold right here. So we're seeing kind of like this favored bullish short-term bias for the Dow, but with the high volatility. So it kind of really bothered me, this look. It just kind of doesn't feel like that's how it should be. So I started thinking, what if we are decreasing volatility through the backing up action, and we kind of seen that. So that's kind of like one scenario how volatility could, slow down and decrease. Another scenario, and this is where the alternative part comes in. What if, in order for us to decrease volatility, we need to increase it? I know it's a little bit counterintuitive, but increase volatility even more now, and then that will bring to some kind of liquidity event where institutions are going to be more willing to come in and establish more meaningful positions. And then from there, we go up. Meaning that, could we possibly go down first and then have some kind of mini structure and then go up from here? Now, for S&P, that looks like a much more possible scenario because of the structure, because of that phase B rally that we've talked about. But could the Dow, the strongest of them all, do something like this? And I started thinking, Bruce, okay, what would be the example of this? So let's go and look at the possible analog where we see that type of structure, where look how in 2015 into 16, we have our bear market. It's a different bear market. It's not necessarily structurally the same, and it has what I like the most, a very conclusive stop in action. But then we have a trading range, and then we have this very, very aggressive rally. So I'm thinking, what if we're experiencing something like this right now, where the rally is most definitely very bullish looking, the character of it, and then we see some demand most definitely on the way down, on the way up. And then volatility starts to increase like it did with the Dow just recently. And then we go down, and we go down to the point of the previous stop in action.